Yo, what up, guys? Welcome to part 20 of the backtesting series. As you know, we've been backtesting different market conditions in the MAEE strategy. So today we're going to be backtesting USD JPY using the MAEE strategy. We're going to go back in time to 2020, July 2020. We're going to see exactly how this strategy works. You understand? So we want to stick to the end and let's fucking go. Let's go. So the first thing you want to do now, you want to go to the air time frame, which is the 4 hour. Enter the 4 hour. So you know the trend of the markets. Okay, so now we're in the 4 hour. You want to know the trend of this market. So looking at this market now, what do you think is the trend? Now look at it carefully. I mean, we can obviously see a series of a down in momentum. You can see it. Alright. So between, obviously, this is a lower high, this is a lower low, this is a lower high, this is a lower low, and it keeps coming down. So this already clearly a downtrend. Alright. So what do you want to do in a downtrend? Okay, let's focus on the MAEE strategy. So we know our market structure right now. From the 4 hour, looking at the 4 hour time frame, the market structure is clearly downtrend. Alright. So we know it's a downtrend now. What's the next thing we want to do? Our area of value. Okay, let's see. Let's draw our trend line first. Okay, so how do you want to draw a trend line? You want to pick the recent two lows. The recent two lows. I can say these are my recent two lows. I can say this. You might be wondering what I'm doing right now. What I'm clearly doing right now, the main strategy is clearly market structure, area of value, entry and exit. We already know our market structure, which is a downtrend. Now I'll get to our area of value. Where are we going to? Where are the areas that we're going to focus on now? Like important zones that we are marking out, you understand? So these are important zones I marked out here. These are important zones. These are areas of values, alright? So basically, these are my values. Once it gets to this trend line, touches this zone, or this zone, these are my area of values. These are areas I want to watch carefully in this market. Okay, so let's see. Let's see what the market does. Okay. This market hasn't touched my trend line yet. So we still hold. We hold until it touches the trend line. Perfect. Alright, so let's go to the 15 minutes. Okay, I just saw something now. This is looking like a double bottom that forms in the higher time frame. Obviously. Can you see this happen like that? So this is price correction basically. What's price correction? Price correction is basically when the price changes from a downtrend to an uptrend, you understand? A reversal. So that's just basically what price correction is. And this year, we're looking to short this market. Now with this price correction now, we might be looking to long this market. So let's look for double bottom instant to lower this market. I mean, look at all this price correction here. Let's see. Let's see. Let's look for another double bottom. So this one has already passed. Okay. I think we'll enter this double bottom by let's see. So, in this market, you react to what the market is doing. This market is a downtrend. We're looking to show this market. But seeing that price correction on the higher time frame made me change my thinking to okay, maybe the market is not going to short. Maybe it's where to long this market. In the market, you you just want to you are basically reacting to the market. Whatever the market is showing, that's what I want to be doing. You understand? So me seeing that double bottom in the higher time frame, which is clearly price correction. And anything that form on the higher time frame is is very important, alright? Anything that form on the higher time frame is the higher time frame cannot easily be manipulated. You understand? So let's see. Nothing is showing in this market, but you do your due diligence, you just follow whatever the market is showing, and you long run, you should be profitable. So we're going to long this market over here. Let's see. Let's see. I'm just going to change this to a red horizontal ray. So you basically understand what I'm doing. Alright, let's see how this plays out. I'm curious to know if this is going to play out well or not. And it's already, it's already played out well. Like, I can clearly see it. I can clearly see it. But another very important thing, we got our market structure, which is a downtrendable. We saw that price correction change and price correction formed in the higher time frame, which is the 4 hour. Clear double bottom, we want to expect whatever the higher time frame is doing. So I said, okay, I'm going to change my bias from a downtrend to an uptrend. So our area of value, you just clearly change to an uptrend. Alright. Then entry, which is this double bottom that formed in the 15-minute time frame. You can clearly see it. Now our exit is the most important of them all. Exit is very important. So when are you looking to exit this market? Clearly, I only exit the market when I see price correction in the probably an M pattern that forms in the higher time frame. Even in the lower time frame, I'll still expect it. Then the second thing I do is to move stop loss. Move your stop loss to break even and to places you think the market is not going to come back to. And you should always allow your profit to run. Alright? So let's see what we can do in this condition. I mean, the market is looking like it's retracing, but we want to hold. We want to always hold to see what the market is doing first. I mean, at this point, if I move your stop loss to this point, let me just indicate it with a red horizontal ray. You can move your stop loss to this point. Why move your stop loss to this point? You can see this candle that forms in this space does not have any wick to the downside. Let me just zoom it out so you see what I'm talking about. You can see this candle that form does not have any wick to the downside. So this is the point you can move your stop loss, while trying to lock your profits and all. Alright. So we'll clearly hold this. Let's see. Market has not given me a reason to come out here, so you just want to be smart. Okay, it's coming down. Okay. Wow, this is looking like it's going to eat stop as well. So still on ODA. I'm coming. Let me just see what the high time frame is doing. Because whatever you want to do in this market, you always want to respect the high time frame. I mean, the high time frame is key. Let's go. Alright, so we open even hit my stop loss, but you know, we're not in the spiritual mind in this market. It's just okay, stop loss hit. So basically this it's um, let's look at what would have done. But okay, what I understood about this is like a bearish engulfing pattern I formed in the 1 hour time frame. You know, what's the bearish engulfing pattern? You see how this candle coming. We can see how this candle over here engulfed this whole green candle over here. That was just like a clear reversal. So what we would have done differently was basically to come out of the market around this point. I'm coming. Let me use a red wick to. Alright. I mean, immediately this fund would have come out around this point. You know, while learning, that's why this is basically about testing series. You want to understand how a strategy performs in different market conditions, you want to know how to react and everything, you know. So seeing this now, you can see there is no wick to the upside. So like this is like a clear reversal. So that's what made a mistake. We would have come out around this point. So basically, we won't make that mistake anymore. We want to see a bearish engulfing pattern in the higher time frame, which is from the 1 hour to the 4 hour. We expect it and to come out of the market, you know. So that's what you want to do. So let me go back to the 15 minutes. So basically, we would have come out of the market around this point. We would have locked at least let me see, at least as like a 1 to 3. Okay, this is basically more than 1 to 3. My stop loss is gonna be around this point. So basically, come out of the market around this. It is like a 1 to 2 weeks to reward. Yeah, like a 1 to 2. Alright, so that's how you want to backtest the MAEE strategy. Alright, so you want to watch my previous videos. Alright, you can see it over here. You want to watch my previous videos on the MAEE strategy. You want to understand exactly how it works. You want to know how to use it to analyze your different market conditions, whether you're trading prop firms or your live account, whatever you're doing. Alright, you want to know exactly how it works and you want to be sure your strategy works, you know. Alright, let's fucking go. I'll see you in part 21. Yeah, 21 of Backtesting series. Let's fucking go.